Welcome, everybody. Good afternoon. Thank you for being with us here today. We are broadcasting live from, where are you in Florida, right?
Jacksonville, yep.
Jacksonville, Florida, and Park City, Utah, where I am. Thanks for everybody for being with us today. We've had the benefit of chatting prior with Rick and Liquid Mining a week ago, so ago, and talking about what's going on in the Bitcoin mining business. And today we'll all benefit from the details of how this all works with liquid mining. So we can't hear or see you, as you know, but we know you're there, and we suggest that if you have a question, please post it to the chat or the Q&A, and we'll get to it as quickly as possible. We have a lot of people coming on today. We're also going to be recording this and putting on the Family Office Insights YouTube channel. And so if after seeing the presentation today, you feel like others would benefit from seeing what you saw, you are welcome to send them there or send them directly to Rick, of course. And we'll make sure everybody's in touch directly with Rick post-webinar. Lots of really interesting things going on in the crypto space, which is some people paint the brush with crypto and blockchain, and Bitcoin definitely is a different asset class, I think. I said definitely, I think, so maybe I'm hedging a little bit, but I think it's become pretty clear that there's lots of cryptos, and Bitcoin seems to be somewhat different. So if, like I said, if anybody would like to speak with Rick post-webinar, you're most welcome to do so. And if there's anybody in your world that would benefit from learning more about liquid mining, please feel free to arrange that with Rick. So Rick and his brother have co-founded this company, and they're actively putting together the equipment. And what's really impressive is the cost of electricity that they secured, which I think all the people on the phone at least know that the cost of electricity is a major component of whether it makes sense to mine Bitcoin. The other thing I would suggest you keep in mind is when Bitcoin came out and got some traction, a lot of people had home mining equipments and that sort of thing. So there's a variety of ways you can do this. And so the thing I would ask you to keep in mind is whether it's better for you to hire liquid mining and do it for you on your behalf, or do it yourself. And I think it's going to become pretty clear. So with that, Rick, thanks for being with us again today. Take it away.
Great. Thanks, Art. My pleasure. So before we get started, I'm going to just pick up on a note that Art just touched on, and that is, doing it yourself. Can you do it yourself? Absolutely. You just need to have access to the right equipment. You need to be able to have access to the right pricing on electricity. And then depending upon how big a scale you want, you need to make sure you have the right infrastructure to be able to handle all of that. And so if you just want to do 1 or 2 miners out of your house, yeah, you could easily do that. But if you wanted to scale it, that brings it to a whole nother level. And before we get started, I just want to make sure I clarify one thing that comes through really clearly on this. And that is, number one, we're looking at this from kind of a picks and shovels kind of perspective. In other words, when gold mining was really big in California for the gold rush, there were a lot of people that came out to California to find gold. And the people that were selling all the mining equipment, supplies, and everything else that went along with that industry, they're a lot of the people who made the most money. Most of the miners didn't make any money at all. So we kind of see ourselves in that picks and shovels, where we actually have the equipment that helps create Bitcoin itself. And the second point I want to bring across is that while there's always the potential, for example, in a baseball game to hit a grand slam, games are won by hitting singles and doubles. And we built this financial plan, which you'll see shortly, for singles. And we're hoping down the road that we get to hit doubles, triples, home runs, and the eventual grand slam. And we'll get into that in just a little bit. but I wanted to let everybody know that we built this to be ultra conservative, not basing it on the growth of Bitcoin in price down the road, even though I will show you what kind of impact that can have. This is all based on Bitcoin being at 20,000 a Bitcoin for the next 36 months without any increase in price. And with that, I'm going to go ahead and get going. So we formed liquid mining with the idea of not only mining Bitcoin, but we also wanted to have it provide increasing income, not just for ourselves, but for the investors that get involved. And while I'm on that topic, I just want to point out that this seed round was set up to be very special for the people that get involved in the seed round. In other words, all of the equipment that's being purchased with the proceeds are act as collateral for the investors. It can't be sold, can't be encumbered. We can upgrade it, which we'll actually cover this one more time, but I think some things are worth repeating more than once. The second part is that you're in a secure position. So these are our offerings in the form of notes and preferreds. So they're senior to the common, which is what my brother and I own. So I just want to put that out. So before we get started, I just want to go over a quick thought, and that is, when the internet came out, it was thought to be a fad. And in 2000, when the dot-com bubble burst, this ad came out. I don't know if you can see it on your screen. It may be fuzzy, but it's December 5th of 2000. And it said many are passing on the internet and just giving up on it. And if we look at where we are today with the internet, I mean, it impacts almost every aspect of most people's lives, personally and in the business side. And I think a lot can be said. There's a lot of parallels between that and Bitcoin as well. So the real question is Bitcoin just a passing fad? And hopefully by the time we get through today, you'll have a little bit better understanding of where Bitcoin is and the type of money being invested into Bitcoin. Real quick, my brother, Joe, is up in Michigan. He lives in Clarkston, which is about 40 miles north of Detroit. He located the facility for us in Pontiac. My brother has a very entrepreneurial background. He was a national sales manager for a digital sign company. And after that, he was in real estate development for commercial development, where they did big box stores and strip centers. That was his own business. So he brings a lot of expertise from that area. He also recently sold about 11 tropical smoothie franchises, and he's focused full-time on the operational side for liquid mining. My name is Rick Dwyer. I'm a co-founder as well. And I have a very more financial inclined background. I spent 10 years in the Navy. After that, I went into financial services, from being a stockbroker in the beginning, M&A work for about 15 years, and then went into residential development. And then after that, came back in the industry in 2011 as a fiduciary. And today I'm also a chief operating officer, or the chief operating officer for Tactive, and our SEC registered RIA. So we're going to get started with just giving you some updates on things that you may or may not be aware of with Bitcoin. Bitcoin is an emerging technology. It's only 13 years old, and it's the only asset to reach $1 trillion as fast as it did, which is just slightly over 12 years. So, but it's new. It's really early in its development cycle. And like any other technology, it's got its growing pains, but its adoption is growing globally. And its growing pains, when I say that, are really the market's growing pains, not Bitcoin itself. Bitcoin does what it was intended to do, and it does it really well, and it does it consistently every single day. The growing pains come around people speculating in Bitcoin, but the technology is getting not only broader and broader adoption, there's more and more money being invested into the Bitcoin ecosystem, and we're going to take a look at that in just a second. So, a lot of technologies, when they first came out, they went through kind of this technology adoption curve, which kind of looks like an S. And some of the technologies like automobiles and landlines, they have a much slower adoption curve. And as we kind of went up the calendar to the later technologies, starting primarily with the internet in the 90s all the way through to today. Some of the adoptions were much, much faster. For example, the internet itself was pretty fast. Smartphones was very fast. Tablets were very fast. Social media was very fast. And so we have this S adoption curve, and here's kind of where we are with Bitcoin. We're already 13 years into the development of Bitcoin, and we're right there. I mean, barely off the zero line as a percentage of the global population utilizing Bitcoin. And part of that is because the infrastructure just isn't there. Part of it is because a lot of people don't understand Bitcoin. But I would say the biggest reason is that the technology to support transactions with Bitcoin, peer-to-peer transactions, is why Bitcoin was actually put together, are still coming together. And the Lightning Network was launched about 3-4 years ago, 2018. To do more transactions per second than the Bitcoin main layer was able to do. But my main point in this slide is that we are still, even though we're 13 years into it and Bitcoin is at around a little over $20,000 a coin, we are still at the very, very early stages. And that's the point I want to make. So how does it affect current customer interest? Well, I just took this off from a recent survey. 2% have minimal to no interest in Bitcoin. There's moderate interest with about 32% of the population, and about 64% have a significant interest. So that has parlayed into a lot of the major corporations in the world and here in the US investing in Bitcoin. In fact, if you look at the top, the largest investor in blockchain technology right now is Alphabet, which is the parent company for Google. The next is BlackRock, followed by Morgan Stanley, then Samsung, Goldman Sachs, Bank of New York, PayPal, Microsoft, etc. And they are investing billions and billions of dollars into infrastructure and blockchain technology. And all of this will have a dramatic impact on the scalability and the effectiveness of Bitcoin itself. Speaking about adoption, I told you JP Morgan was the third largest adopter or investor in blockchain technology. And in May, when Bitcoin was still in the $30,000 range, they said they felt Bitcoin was undervalued at that time, 28%. And they've now stated publicly that cryptocurrencies are now their preferred alternative asset class. So there are some issues, though. There's been a lot of volatility, which has investors concerned, and also the actual education and understanding of Bitcoin by potential investors, which I think is changing over time, but it's changing relatively slow compared to some of the technological changes that are taking place. So we're going to talk about the Bitcoin inflation curve.
Can I just ask a quick question?
Sure.
So do you believe that the initial intention of Bitcoin was to be a form of payment for goods and services, and that it's evolved to an asset more so than, paying for stuff?
So I think initially when the white paper came out in 2008, Satoshi Nakamoto, which is the pseudonym being used to denote who the creator of Bitcoin was. No one knows if that's an individual or a group of people. But in the white paper, they specifically point out that Bitcoin was meant to be utilized in peer-to-peer transactions. So I could send payment to you, you could send payment to me, or we could send it anywhere to anybody that wanted access. What's really kind of emerged is that Bitcoin still can be used for transactions, and the Lightning Network, which was launched in 2018, makes that even easier to transact and at a much larger scale than the core Bitcoin layer can do. So Bitcoin can be used for both, but I think most people, myself included, look at Bitcoin as more as an asset versus a transactional type of coin, even though it can be used for transactions. Yeah,
I think that's the general consensus, simply because, and this is just my feeling, so I don't necessarily want ask anybody else to adopt it, but it's like equity in a company. Why would you spend it when its potential is going to it could potentially increase in value, right? So it just seems to have evolved to more of an asset than a way to pay for stuff.
Yeah, and we're actually going to cover that same point, Art, here in
Yeah,
just a
okay.
few minutes.
Okay.
All right, so getting back to our inflation curve, what really kind of sets Bitcoin apart is that it has a supply line and a distribution line. So the supply line is what you see in black, and you'll notice it's not a smooth arc. It's kind of got, if you look closely, it's got these flat lines, and those flat lines correspond to what's called a halving, which happens every 4 years. And the halving is the amount of Bitcoin that's being issued in a block reward. And if you look over here, and we're going to get into this on the very next slide in a second, but this halving, keeps stepping down, and the steps get smaller and smaller. And we're going to talk about that in just a minute. So I don't want to take too much time on this slide. But the important thing to note is that there will only ever be 21 million Bitcoins. And the very last Bitcoin is estimated to be issued sometime in the year 2140. And it's because of that halving. It doesn't ever get quite to zero until 2140, but it gets really close way before that. So there are currently 19 million Bitcoins issued. And the vast majority, if you look at this curve right up in here, the vast majority of Bitcoins will be issued by 2040, and sometime between 2030 to 2035 will be the vast majority of Bitcoins that will have already been issued, with the balance being issued over the balance of about the next 110 years after that. What's interesting, though, is that when Bitcoin first came out, a lot of people played with it, mined it, because you could do it right on your laptop, your phone, you could do it on your computer. No one paid attention to it. I don't know. There was a story recently that a gentleman who lost 8,000 Bitcoins in Europe by throwing his computer away, tried to get approval to dig up the landfill to find his computer using robots, and he was denied access to 8,000 Bitcoins. So a lot of Bitcoins are estimated to be lost. It's somewhere in the 3 to 4 million range. I'm just splitting the difference here at 3.5 million that people believe are gone forever. Now, keep in mind that there's over 20 million 20 million millionaires in the US alone, and over double that number globally. So if every one of them wanted just one Bitcoin, there aren't enough to go around. So we're going to spend a little time, not much, just a couple minutes talking about the halving. So the halving is where the amount of Bitcoin being issued in a block reward is cut in half. So it started at 50, went to 25, then 12.5. We're currently at 6.25, and in about less than 2 years, it's going to drop again to 3 1/8. But here's the curves on the first 3 halvings. You can see each of these curves, and you can't really get a real sense of this because this is a logarithmic scale. So we start down here at about $2, and it went up to just under 1,000. Then it went up to about 17 to 18,000. And then from there, it went all the way up to around 69,000. And then it's come back. So this graphic was done in, I think it was early 2022. And they're showing a bottoming in the $19,000 range. You know, that mark, that's still yet to be seen. We did see Bitcoin hit just south of 18,000 for a few seconds, and then it bounced back up and stayed in the 18,000 range, and then quickly went back into the $19,000 range. So this point's already been hit. Whether that holds or not is still yet to be seen. And by the way, I'm not here to make any projections on the price of Bitcoin. I'm here to talk about what working with liquid mining can do for you by being involved in the Bitcoin ecosystem. So let's look real quick by following this halving schedule of how Bitcoin behaved during those schedules. So Bitcoin was effectively zero in 2009 when it first came out in January 3rd. By 2012, during the first halving, the price on the day it halved was $12.35. 150 days later, it was $127. The second halving was in 2016. And on that day, it was $650. So it went from 127, which was at the end of 150 days in 2012, to 650. And then 150 days later, it was 75.58 or 758. I'm sorry. Then the next halving was in 2020. By that point, Bitcoin had risen to $8,821. And now 150 days later, it was up to 10,943. What's interesting is between 2016 and 2020, it actually rose to just under 18,000 a Bitcoin. So that's a pretty dramatic increase from 650. And already in 2021, we saw Bitcoin get up to just under, $70,000 a Bitcoin, and currently it's sitting at around 20,000 a Bitcoin. So if it keeps following that scale, or I mean that pattern that's been having that we've had so far the last three halvings, then the assumption is that Bitcoin will continue to grow as not only is global adoption rising, but the supply of Bitcoin is diminishing. So unlike in fiat currency like the US dollar, where trillions are being issued just by literally the push of a button, in Bitcoin, it's a predefined inflation rate, and it just cuts in half every 4 years until there's nothing left. And when just supply and demand, as supply is dwindling, but demand is increasing, you get these increases in pricing. And as we've seen, they can be pretty dramatic at times. So I'm going to spend just a couple minutes talking about what is Bitcoin mining. So Bitcoin mining is part of a process, and all the process is trying to do is get a block of data onto what's called the blockchain. And a blockchain is a block of data that's been confirmed. And once that block is confirmed through mining, then it is added to the next block. And that link there is called, it's called a link between each of the blocks, and because they're in serial order, and that's what constitutes a blockchain. And so the block, once a block is assembled, then the network, the Bitcoin network, puts out what's called a block puzzle that has to be solved. And it's actually technically referred to as a nonce. It's a number that's used only once. And then proof of work is used by the miners, and the first miner to get the reward, which is equal to or less than that block puzzle number, they get the reward. But before it's earned, it has to be verified. So it's now broadcast across the network. Once it's verified, and all of this takes literally milliseconds to get done, then that miner earns the block reward, which is currently 6.25 Bitcoins. And that happens every 10 minutes, 24 hours a day, 365 days a year. And that's an important thing to note. So it's been going on like that nonstop since January of 2009. So what are some of our business advantages? Well, unlike most businesses, we have no advertising. We have no customers. We have no collectibles. When we're mining, as we do today, the money shows up in our account, or actually the Bitcoin shows up on our account every single day at whatever predetermined time by the pool that we're working with. And I'm not going to get into pools, but I'm happy to do that if anybody has a question on that. We also have no legacy equipment. And the reason that's important, a lot of people who started mining, mined that equipment or mined using that equipment. And today when we see the price dropping, they're no longer able to mine because that equipment is not as efficient, and it uses way more power. We don't have any of that problem. All of our equipment is the latest equipment. It's all been purchased within the last, I would say, 8 to 10 months. So it's all brand new equipment. We have existing long-term power agreements, which we'll touch on in just a little bit. Our facility has a long-term facility agreement. We have a 3-year initial lease with an option to purchase, as well as 2 5-year extensions. We also have access to additional power beyond our agreement of 50 megawatts. And we utilize immersion cooling. And that's important because electronics are affected primarily by heat, vibration, and dust. And if you can eliminate those three, electronics can last virtually indefinitely. And because we use immersion cooling, it cools our equipment about 1,200 times more efficiently than air. And that allows us to get about 50 to 60% more efficiency or capacity out of the equipment, which means that for every piece of equipment that we buy, by utilizing immersion cooling, it's the equivalent of getting 1.5 pieces of equipment. So it's a very fast ROI on the immersion cooling. Here's an air-cooled room that we built in our facility. It currently houses 110 units. And what I'm going to do is back up and see if I can go ahead and bring this up. Now, you may not be able to hear this on there. I'm gonna,
You can kind of hear it.
okay. So that's 110 miners that are currently working. Each of those miners puts out 75 decibels of sound. You must put headphones on to be in there. This is not where the liquid cooling will go on. This is effectively our testing center. And we're going to show an intake valve or intake duct. And you'll notice that that cloth is being pulled in because we maintain negative pressure, because that 5-foot fan is exhausting more air than we're pulling into it. So just want to kind of show you that for a quick second. And the rest of that facility is about just around 15,000 square feet, and that's where the bulk of the cooling equipment will be going. In fact, we expect the first order to arrive in mid-October. So when you're mining, you have a couple things you need to be concerned with. One is your cost to mine. I already told you that we have a 15-year agreement for 50 megawatts, and we have low overhead. Between our internet, our security, and our lease, we run about 11,000, a little over 11,500 a month. We generate 1 Bitcoin for 11,200. So even today we're profitable. Our gross margin after deducting electricity is over 83%, and it increases as the price of Bitcoin goes up. This article, I mean, this asterisk I put at the bottom was from August 5th, that the average price to mine Bitcoin in the United States is $21,000 just to mine 1 Bitcoin. So today they would actually be losing money if they were mining Bitcoin and it cost them 21,000. On the right side, you'll see that the United States average across the whole United States is 16 cents a kilowatt. In Michigan, it's actually 14 cents. In Florida, where I live, it's 10 cents. In South Carolina, I had friends over recently, it's 11 cents. But what we were able to negotiate is power where we're getting it at well, as you can see, $41 a megawatt, which puts us right between the cost of electricity in Saudi Arabia and Qatar. So I just want to get into our financials real quickly. So these are based on a 5 million investment that's fully deployed. The price of Bitcoin is set at 20,000 and we don't expect it to increase at all over the next 3 years, at least for this pro forma. That's not what we actually expect, but that's what we did for the financial modeling. And then that would allow us to be at 157 petahashes. A petahash is 1,000 terahashes. So that's 150,000 terahashes that we would be doing per second. So I'm going to go over to an actual live calculator here in a second, but I just want to show you what we put in. So the 5 million, over here we have our 9 cents of what we're earning today. And today we're earning 9 cents per terahash per day. And I'm going to just double check that number because it does change based on the price of Bitcoin. So I'm going to just make sure we're currently at giving you the same information that we had yesterday. And give me 1 second, I'll just pull that up real quick. And so right now it is actually at 8.18 cents. So I'm going to change this to 0.0818. Oh, I can't do it there. I'll do it in the other model. It was 9.3 and now it's 8.018 because Bitcoin's sitting at 19,970. So it's at basically 82 cents a terahash per day, or I'm sorry, 8.2 cents a terahash per day. So here's our 5-year projection, assuming Bitcoin never went up in price, and you'll notice that there's growing income, and I'm going to explain how that's possible in just 1 second. So I'm going to go over to our calculator. Give me 1 second. I'm going to stop sharing. I got to reshare that screen. All right. Let me get back over here.
Okay. Looks like you're live now.
All right. Can you see my calculator, Art?
Yep.
Okay, perfect. All right. So here's the same exact calculator. I was just showing you results from this calculator on the other screen. I'm going to now change this to 0.0818. So 10%, 10%, and would be 50% the 3rd year. So if Bitcoin never increased in price for the next 3 years, these are going to be our expected returns. And the reason that we're able to grow income for our seed investors is we're not asking our seed investors to make any additional investment. You can take all the proceeds that you're earning on your note or on your preferred and do whatever you want with it. We're going to take the profit that's remaining and we're going to continue to buy ASICs, which are they stand for application specific integrated circuit. Those are the miners that do the hashing and create Bitcoin. So we're going to be investing the money, and a portion of that money we're adding back in for the benefit of the seed round investors. And so you're going to get more and more machines working for you. And as you can see, that's then starts the amount of income that you're earning growing. And the way this works, so when you're looking at this calculator, this is the total amount raised. This is the amount that an investor puts in, and it doesn't matter what that investment amount is. If I change this to 200,000, that 5% of the hash rate or whatever that percentage is will change, and that's just the percentage of the hash rate that they're earning. That never changes, but the amount of money being earned that they're earning their 4% on is expected to change as we keep growing that farm, mining farm. So that's kind of how this calculator works. I want to show you two things. One, so if Bitcoin dropped in half, then we would still be able to pay all of the investors their 10% for the next 3 years. It's a 3-year initial hold. And we would cover all the expenses, including all the interest, obviously. And we would then be able to, so we would be losing probably just under $3,000 a month, but we have our own farm that we use. So we're actually not losing any money at all. We just wouldn't be making that 3,000. We'd be putting it into the investor pool to make sure that they're covered. At the end of 36 months, the investors have a choice, both on the note and on the preferred Series A, which we'll get into in a little bit. You can convert, you can redeem, or you can extend. And we'll talk a little bit more about that in just a moment. I'm going to go back to the presentation. Give me 1 second. There we go. So back to the pro forma. Now, what I didn't show you on that pro forma was what if the price of Bitcoin goes up? Well, I'm going to show you that on a separate screen, just as annual return numbers and a CAGR that goes with that. I think everybody will be extremely happy if Bitcoin goes up from where it is, and I'll show you what some of those returns look like. Let's talk about the use of proceeds. Our burn rate is 0. We are cash flow positive today. We're allocating 120,000 of what we're raising to go to the BD that's facilitating our Reg CF. We also have a Reg D, and we have 170 that we've already paid out to DTE as a deposit. Some engineering and permitting costs, mechanical, electrical installation. We're holding back a reserve to pay interest in the event that we hit a point where if we hit below 3 cents a terahash, then it may make sense for us to turn the equipment off. And at that point, we would use the reserve to pay the equipment. The other thing is that we have the immersion cooling equipment we just ordered, and we expect that we'll have about $3.5 million to buy ASICs with, which are once again the mining equipment that we're using. So let's just cover a few of the investment highlights. The seed round is a $5 million round. It's broken up into a 10% convertible redeemable note and a 10% Series A preferred stock. They're both structured almost the same. They're both senior to the common, which my brother and I own. And with that, we expect to have over 800 new ASICs, somewhere between 800 and 1,000, depending upon how quickly we can get the money in. We're also utilizing the liquid immersion cooling. So when we buy the equipment, we're also increasing that by a factor of between 40 and 60%. We expect that we'll have 1.5, well, no, let me rephrase it. I misspoke. We have 1.6 million that we've already put in, and then we have 1.5 million we expect to close within the next 3 days. And then in addition, all the equipment that is being purchased through the round is being used as collateral for the investors. It cannot be sold or encumbered. We can upgrade it. So if other technology comes up, we can upgrade it. We just have to maintain the same value that's in that equipment currently. There's one other benefit. We didn't want to do a safe round because on a safe round, you're just making a straight investment. You get no immediate return on your investment. But we also weren't sure what the future value of the company would be. So we worded that any future valuation that is really due to a merger, acquisition, or a public offering, you would be able to participate at a 20% discount to that priced offering. And as I stated earlier, this isn't a 3-year initial hold period. So what I'm showing you right now is kind of the potential ROI. So what you're looking at right now is the last year of Bitcoin. And after the unwinding or the deleveraging of Bitcoin and Bitcoin miners due to the collapse of some of it, the financial markets, but a lot of this had to deal with lenders in the crypto space going bankrupt or going out of business. A lot of miners were over leveraged. A lot of individuals were over leveraged. A lot of equipment and a lot of Bitcoin wound up being sold at almost any price. Drove the price down. You can see right in here. That was kind of the low, and that was right in that $18,000 range. And then just recently, we're back in the $25,000 range, and now we're back in the upper $19,000 to $20,000 range. But here's what it looks like right now. As I just showed you, Bitcoin stays around 20,000. We expect our returns to stay in the 10-14-26, which gives you a CAGR of 16.47. In the beginning, I told you that we are looking, and we structured this to be in using baseball vernacular, just hitting singles, getting on base and getting people on base, and eventually turning them into runs. But if Bitcoin were to go back to 30,000, we would call that a triple. It's way beyond a double. And we're at 26%, 68,179 for a CAGR of 80. And then obviously that would assume that became 30,000 immediately. And the next one is 40,000. It'd be 52,196 and 737 for 235 CAGR, which is I would consider a grand slam. And once again, that would be if all of a sudden we woke up today and Bitcoin was 40,000 and it today and stayed 40,000, or it averaged 40,000 over the course of the 3-year period. So we built this plan just based on the 20,000. If it goes up, and we do expect to see it go up, and it has the potential to go up even higher than 40. But if it does go up, depending upon when it goes up, it could be anywhere from these numbers to these numbers, and depending upon where it goes. If it goes greater than that, I don't think anybody's going to be even remotely upset about that. So I'm not going to dwell on that. So how do you invest? Well, we have one offering, which is our note offering, which is both for accredited and not accredited investors. We also have a dividend offering for accredited investors only. We have a place where you can go online and invest. On the non-accredited side, it's as low as 2,200, and on the accredited side, it starts at 50,000. I can be emailed directly with any questions that you may have on an offering, or if you're looking to invest a rather substantial amount, which to me is $1 million or more, and you want to talk about how we might be able to structure things a little bit differently, we're open to that conversation. So with that, Art, I am done with my presentation. I'm ready for any questions if there are any.
So Rick, our friend Rosario, just some clarification here. I'm going to read you the question, but
I'm reading it right now.
Okay, there you go. So
yes.
let me read it so the audience knows. Rick said the cost of mining is 21K, which is not accurate, right? Per Bitcoin. What is the incentive of producing when the miner has a negative arbitrage? So I'll let you answer that in a minute. Also, electricity rates have doubled in many areas because of inflation and these increases, but your cost of electricity is locked in, right?
Yeah, so I'm going to answer the first part, and there's actually 3 separate answers in here. So the cost of mining for Bitcoin on average in the US is 21,000. And so there is no incentive to mine it if your cost is greater than the cost of Bitcoin. So you're absolutely right. There'd be absolutely no incentive to have a negative arbitrage in that case. You could literally just shut off your machines and just use that money and buy the Bitcoin for less than the cost of mining it. So our cost to mine is 11,200, and it goes down as the price of Bitcoin goes up. The second question that you had is electricity rates have gone up in a lot of areas. In fact, one of the first areas we looked at was Texas, because they had at that point, you could get long-term agreements in the 4 to 5 cent range. Well, those agreements have now changed. It's a deregulated state, and those rates are now, for the most part, between 5.5 and 8 cents. So what we have locked in with DTE is 50 megawatts of power at 4.124 cents a kilowatt. And that's a locked 15-year agreement. And it, by the way, I didn't mention this earlier, but that's uninterruptible power. So unless there's a natural disaster or some sort of storm that knocks something out, we have uninterruptible power as well. You may be asking if, and I don't see another question, so I'm going to keep going for a second on this. Point. One of the reasons that they want this kind of usage is because it allows them being the utility company, to harden their grid. If they know they have a user that's going to be using power 24/7, 365, in fact, that's the only way we could get the rate, then they know that they can then build up around that that user and strengthen their grid, bring more power and capacity into that area to service the rest of the area. So one of the untold stories of Bitcoin is that a lot of utilities are in partnership with Bitcoin miners, contrary to what you might be hearing, in hardening and strengthening the power grid in the US.
So part of what people think, I think, Rick, is you have an agreement and anybody can change their mind and violate an agreement, right? And
Absolutely.
they just have to live with it. What's your sense of what's going on with this power company?
With which one? DTE?
DTE, like you've been talking to him, your brother's been talking to him, you know.
Well, he's not talking to him. He's actually with them and the engineers. We're actually working on bringing in another 7 megawatts of power into that building that we have for the next phase of expansion. So they're fully on board with that. And yeah, could they change the agreement? I guess so. But to help protect against that, which I mentioned on the phone call last week, we are already have identified several other properties outside of Michigan, specifically Ohio, Pennsylvania, New York. Although New York's a little interesting, but there's still some opportunities there, and a few other states where we can get not only power at good rates, but the vast majority of the power we would be using is renewable. So it would be after the meter. So our meter would be our own power. We would actually set up our own substation and generate our own power. And if we needed any grid power at all, it would strictly be for backup, or if we had a sustained cloudy or overcast area where we weren't producing the amount of megawatts that we needed from the solar farm. But it would be a combination of solar. It would probably be a combination of hydro. And if you're hearing big booms, because we have a major thunderstorm going on right now, so I apologize.
I did hear something. Yeah,
yeah, that was it. And also we have we're also looking at hydro. Hydro is actually our preferred way of doing it. There's just a lot of regulatory hoops and environmental studies you have to jump through to do any kind of hydroelectric. Mostly sensitivity to fish and other things. Oh yeah, it's quite the storm. But anyway, any other questions that you have there, Art?
So I have a question of what's the business case for holding on to some of the Bitcoin long term rather than flipping it into fiat right away?
So you know, a lot of miners were holding a rather significant part of what they were mining, and it's referred to as HODL, hold on for dear life, because of the price swings you can see in Bitcoin. And that business model, when you're holding on to Bitcoin, you're now taking on the risk of where Bitcoin is going. And when Bitcoin was rocketing up and went all the way up to $70,000, well, a lot of those miners were looking really good on their balance sheets, and they were many of them were leveraging that and borrowing to expand even faster and larger. Our philosophy is a lot differently. We'd rather convert it to other equipment and expand the farm, because if Bitcoin just stayed at 20,000, as I showed you earlier, then the growth in our farm capacity or hashing capacity keeps increasing, and our income keeps growing just because we have more equipment. If we were holding on to Bitcoin and it didn't go anywhere for the next 3 years, we'd have no ROI on our money. As Bitcoin continues to grow in price, well, that just accelerates even more. Now, today, we're not looking to hold any Bitcoin, because we're in a really strong growth phase right at the moment, and we want to do everything we can to take advantage of some very depressed pricing in equipment, and it's all brand new equipment. So we can buy equipment about 30 cents on the dollar just from 5 or 6 months ago. So we want to take advantage of that. Now, will there be a point where we may hold 5 or 10% of Bitcoin? Maybe, but I don't think we'll ever hold more than 10, and I don't think we'll ever leverage it, because there's no reason to.
Yeah, good answer. Totally makes sense. Well, the detail of which you've gone into here, not just in the financial model, but how this all works, is super helpful. Really appreciate it.
My pleasure.
We're going to make sure everybody gets directly in touch. We'll give you the list of people who participated. We'll make sure the recording gets up. Like I said, if anybody here would like to pursue a discussion with Rick and his brother and so forth, you're welcome to do that. And if there was anybody in your community that would appreciate knowing what you learned today, certainly welcome to do that. Listen to that thunder. That's awesome. Yeah. And your internet's still up.
I just wanted to bring some sound effects for the show. It's just for impact.
Yeah. Super appreciate it, Rick. Thanks for doing it today.
Thanks,
and thank you, everyone, for sharing with us today. The only thing you can't make more of, and that's your time. Till next time. Thank you.